2021, Asia contributed 42% of world GDP at purchase and power parity, more than any other region. It cemented its status as a major presence in the world trade. In 2021, Asia accounted for 53% of global goods trade, and between 2001 and 2021, 59% of world trade growth. Consider Asia's role in the world 80 largest trade routers, accounting for more than 50% of value of global trade. SCB2 form 49 include Asia at the least end and 22nd on both ends. Asia is home to 18 of the 20 fastest growing corridors and 13 of the 20 largest. China large rows stand out. The majority, 56% in the 2021 of the value flowing through the 20 largest global trade corridors involves China. By far, the world's largest bilateral trade corridor has run between China and the United States. $723 billion in 2021, but US-China trade has been slowing. This corridor grew at a compound annual rate of 3% between 2016 and 2021. Another notable phenomenon is a new trade triangle between China, emerging Asia, and the United States. China's share of US import inclined in about 6.0% points between 2018 and 2022, while those of emerging Asia, frontier Asia, and India increased by 4.4% points. At the same time, Asia country trade with China grew rapidly. Trade between China and Vietnam grew by 16% annually, and between China and Malaysia by 30% in the same period. Okay, let's look at the regionalization thriving by complementary. Asia is stitched together economically. Almost 60% of the value of Asian 2021 trade originated within the region, second only to the European Union, and the figure is increasing. Within region trade grew at a compound annual rate of more than 10% in 2016 to 2021, about double at the pace of non-Asian routes. While the level of trade integration approaches that of the EU, the drivers are different. EU trade integration has been underpinned by treaty-based governance. Asia has been propelled by trade cooperation. Asia does not behave as a single political and institutional aligned bloc. Take note pattern in the UN General Assembly, where Asian countries, both complementary with China or the United States, reflect on the issue-based approach rather than the strategy narrative of political alignment and either of these major powers. Okay, let's look at the more contested world of Asia to navigate. Major Asian economies are now considerable new enter of economic power. China now is the world's second largest economy. Japan the third, and India the fifth. This is very success. However, ended the unipolar world, a new actor with greater influence. With greater influence, international relations may be more contested. In the past, Asian economy traded with each other with a clear guided principle of comparative advantage, leading to maximum efficiency and lowest cost. But a new factor has entered the frame security. This will not switch globalization of economy and highly interconnected and independent, but strategic consideration will reshape trade and growth if there are tension and restriction both within and beyond Asia in international arena. Okay, let's look with the dealing with dependency. Complementary comparative advantage. Advantage as driving the growth of trade routes and value chain within Asia. The regional trade is characterized by a handful of large and trade corridor products that are strategically important, complementary and highly concentrated. The last and living economy vulnerable to supply chain disruption. Take for instance the following four critical supply chains that are mostly Asia and then extend to the world. Minerals and metal. Asia is the world's trade crossroad for minerals and metals such as rare earth elements, copper, bauxite, aluminum, nickel, tin, and zinc. As the world refining hub, China plays a particular signal role In the case of naked oil, which is crucial for battery, Asia is the world's largest importer and producer. In 2021, more than 90% of all naked oil imported flow into Asia, 90% going to China, and 50% of gold mine production of nickel occur in Indonesia and Philippines. A single route between China and the Philippines accounts for 59% of the world nickel oil import. Or consider steelmaking, Asia export 55% of the global value of iron ore and metallurgical coal, and 85% of the value of global trade in those materials involved Asia. Within the region, 59% iron ore metallurgical coal trade flew from Australia to China. The latter accounts for 53% of global crude and steel production in 2021. Similarly, for aluminum, oil, and concentrate, most notable bauxite, China accounted for 68% of global imports, sourcing from Guinea, 58% of Chinese imports. Okay, let's look at electronic chips. Asia is the largest trader and manufacturer of chips integrated recruit in most electronic devices. More than 60% of the world's semiconductors are produced in Taiwan. 33% of the world's largest 40 conductors involve Asia. Only 83% of US imports of clip value of chip import is more than that of oil and petroleum. Okay, let's look at the energy. Five countries all in Asia account for 70% of world liquefied natural gases import. Australia alone accounts for 24% of global export, and Malaysia for 6%. In this case of oil, 78% of domestic consumption comes from import, with China the world's largest importer. Japan and South Korea rely on import for close to 100% of what they need. About half of Asia oil imports come solely from the Middle East, but Asia is the next exporter of coal. Agriculture, more than 1/3 of the agricultural produce technology manufacture hub. Asia has become world processing, manufacturing, and assembly hub. Its manufacturing sector value added increased from 29% to 53% of global total value and added between 1992 and 2021. In China and Vietnam, 29% and 21% of the workforce respectively was employed in manufacturing in 2022, far higher than the global share of 14%. Asia punched above its weight in global GDP in 4 areas: consumer electronics, industrial electronics, electric vehicles, and semiconductor. In this account for more than 40% of the world 3,000 top technology-related companies' share of global revenue, R&D spending, and potential. All manufacturing sector that rely more in digital and software service for life sciences. Gap in high barrier technology. Today, half of the internet users in the world are in Asia. Broadband penetrations in several Asian countries is higher than in Europe. 89% above 69% all in the e-commerce transaction in Asia are executed using mobile payment, far higher than 29% in Europe and 32% in North America. Imagine Asia economy like Indonesia, Thailand, and Vietnam have already higher penetration in mobile payment than either United States or in Europe. Okay, let's look at the world biggest ever labor supply and shock. In era of market, labor supply shock. In era of markets, Asia was largely in a demographic sweet spot between 1990 and 2002. 55% of global growth in the working age population was in Asia. However, the region working age population grew faster than its overall population. Compounding favorable demographic, urbanization, and association shift of the farm was a good and positive labor supply shock for world industrial urbanization, and the associated shift of the farm was a good positive labor supply shock for the world industrial workforce. The share of African urban population rose from 40% in 1990 to 48% in 2022. The urban population tripled in China and grew 2.3 times in India. This move also restructured the workforce, with the farm share of employment declining from 49 to 22% in China and from 48 to 28% overall for Asia between 1990 and 2022. But across Asia, large share of population still work or farm, suggesting considerable scope for urbanization to continue. For instance, in India and China, 45% and 22% of workers respectively work in agriculture, and that's compared with the less than 2% in the United States. China urbanization rate is expected to hit 80% in 2050 from 62% today, and India 53% from 35%. By 2050, in addition, 600 million or so people will live in sitting in these two countries alone. So let's look at capitalization, mobilizing the largest capital base amid financial stress. Capitalization constitutes the driver of global supply and demand, and the trajectory of finance and wealth. Asia has deepened capital faster than any other region, despite lower return than in Western economy. But now interest rates are rising, real estate prices are falling, capital markets are more volatile, growth is slowing, and many economies face balance sheet stress. In this new environment, can Asia improve the efficiency of its financial system and show financial resilience in order to deploy the largest amount of capital in the world? The Asian economy enjoyed rapid growth and became major player in the world economy. The region as a whole achieved significant capital deepening. It benefited from large domestic savings as well as significant investment inflows against the background of a stable macroeconomic environment. Between 2010 and 2020, Asia fees investment grew at 7%. Asia mobilized $91 trillion between 2000 and 2020. Overall, the region experienced much faster capital deepening than the rest of the world, although not enough to catch up. Capital intensity varies significantly across Asia. Real fees and capital stock per worker in Japan is about 21 times that of India and about 4 times that of China. Saving back these changes in 2022, Asia growth domestic saving share of GDP was about 40%, and compared with 26% in the EU and 70% in the United States. This dynamic capital deepening left an indelible mark on Asia, driving economic growth and innovation while lifting millions out of poverty. I think that is the end of today's class, and that is the end of the course at large. So I wish you success in your exam. Next time we'll meet again, probably next semester. Thank you very much. Thanks for coming online today. Bye-bye.